Are you prepared for the 2021 stock market crash? Problem is that our memories are short-lived. We forget that the stock market crashes every so often. It's definitely happened a few times over the last 100 years. What's up, everybody? Welcome back to the channel. I'm your host, Danish, and I make personal finance, investing, and real estate topics easy to understand and keep up with. Vaccine talk everywhere you look. It's what's sweeping the markets and unfortunately creating an enormously volatile situation in the financial markets. It seems as though investors believe that the creation of a vaccine will solve all market troubles. Unfortunately, it's not that simple. A vaccine being rolled out, no doubt, is wonderful news. It's the first step towards anything being close to normal, or whatever normal may look like in our future. But that's just it. It's that first step. First of many. In fact, some investment managers believe that there won't even be a recovery in 2021, and it could be 2022 until we actually see a solid recovery. The reason for this is that the vaccine is just starting to get produced. It will be saved for those that need it the most. Until we can get the vaccine safely to everybody, there will still be surges of COVID-19 happening around the world. Globally, there have been trillions of dollars spent just trying to stimulate the economy for both businesses and individuals alike. With the winter season causing a rise in COVID cases around the world as part of a second or even third wave, it's very likely that there's still more stimulus spending yet to come. The problem is that this will likely cause higher taxes in the future and potential cuts to social programs. I want you to understand and know all this for one major reason, and that's to be prepared. Later in the video, I'll show you exactly how you can prepare, because it's not a matter of if there will be a market crash, it's a matter of when. We don't even have to look far to find a recent example of a market crash, which occurred in early 2020 when COVID-19 was just setting in. My question to you, why do these crashes even happen in the first place? I want you to think of a stock market crash like a social phenomenon. It's human created, but triggered by economic events, either on a global scale or in any one large geographic area or sector. But it creates a domino effect and involves our own psychology. The price of a stock will fall if we're constantly willing to pay less and less for it. And if something major and scary is happening in the world, our crowd psychology kicks in and tells us that we need to save money. We need to save our own money and shouldn't pay as much for stocks. This then triggers a sell-off. But before we can get to the actual sell-off point, a few things need to happen. First, the stock market goes on an unprecedented bull run and is continuously reaching new all-time highs, and this happens for prolonged periods uninterrupted. Second, everyone is overly optimistic about their winning stocks. Third, the PE ratio of the market is much higher than what would be considered normal. The fourth factor, companies and individuals are getting into highly leveraged positions by borrowing as much as possible. This one's a bonus: government regulations or interventions along with natural disasters. Let's take a quick journey through time. Before the stock market crash of 1929, there was a 6-year run-up in the stock market. But on Tuesday of 1929, the stock market, it dropped by 10% that very day. By the time it was 1932, the stock market had lost 89% of its value from its peak. It would take another 23 years before the stock market would recover. That's an entire generation in between. Imagine, what if your portfolio right now dropped by 89% and you had to wait another 23 years to get it back? How would that make you feel? I want you to really think about this. 3 years to lose 89% of your hard-earned money and another 23 years just to recover. This is why it's so important to understand the risk behind the stock market and your comfort level with your asset allocation. Later in the video, I'll tell you exactly how you can address this concern. Many investors fear a stock market crash. You're not alone. While others consider it an excellent opportunity to purchase stocks on the cheap. The possibility of another stock market crash is very real, and investors looking at it as an opportunity might prepare by increasing their liquidity. However, income investors could see their investment values drop and dividend payouts slashed during a stock market crash. I'm sure you've already witnessed this in 2020, where we saw many companies cut their dividends in 2020 just to preserve cash. Many portfolios took a major hit in 2020. You may have recovered by now, or maybe you're not even close to breaking even. Remember that stock market investing is generally considered to be risky. If you are investing with a long-term horizon, one option may be to pick defensive stocks over popular ones. Holding dependable stocks that can pay you dividends can help you find a good place to park your capital. The other option is to ride the stock market waves by holding index funds. And you can benefit from long-term gains. This is what's known as a total return approach. During a stock market crash or even a correction, if your own situation turns out well enough, you could use some of that cash to purchase even more high-quality stocks or ETFs for a bargain price. If your money is invested in the right assets, then you don't even have to worry about panic fueling your investment decisions. I'm going to show you now how you can prepare for that next stock market crash. When the market is trending upwards, it might make sense to concentrate on one particular sector or industry with tremendous growth potential. On the flip side, relying on one specific sector or industry could increase your portfolio's risk in times of uncertainty. That's why you must start diversifying your portfolio now. And don't let the next market sell-off wash away your dreams. My approach to prepare for a stock market crash involves 3 steps. Let's look at step number 1. Keep investing for the long term. A long-term investing approach involves investing in stocks and or funds that you believe will stand the test of time. These could be broad-based market index funds that track indices like the S&P 500, the Dow Jones Industrial Average, or the TSX. Or they could be individual stocks that are solid enough to withstand market volatility. My advice to you is that no matter how you choose to invest, try not to get so caught up in how the stock market is performing right now, especially if you are taking the long-term approach. The stock market can experience more volatility in 2021. But as long as you're taking that long-term approach, this won't impact your strategy. Step number 2, check your asset allocation. The older you get, the more conservatively you should be investing. That's because if the stock market crash were to happen just before you plan to retire, that could derail your entire retirement. On the flip side, if you have decades before retirement and you're investing primarily in bonds or cash and you have very little money in stocks, it will be that much harder for you to reach your investing goals. While your money may be more protected against market volatility if it's sitting in bonds or cash, conservative investments typically don't see as much growth as equity investments. A good benchmark when it comes to asset allocation is to take your age and subtract it from 110. The result is how much of your portfolio should be invested in stocks. If you're 65 years old, for example, subtract that from 110. The result is 45. So approximately 45% of your portfolio should be invested in stocks and the other 55% in bonds. By checking your asset allocation each year, you can make sure you're investing aggressively enough to reach your goals, but conservatively enough so that you can still retire, even if the stock market takes a turn for the worse. Step number 3, the last step, make sure you have a healthy emergency fund. Now, some might argue that could potentially be step number 1, but that doesn't really matter as long as it's part of your step-by-step process. If 2020 has taught us anything, it's the value of a well-stocked emergency fund. Unexpected expenses and job losses can happen out of nowhere, and an emergency fund can help you keep your finances on track, especially when the times are tough. When you have at least 3 to 6 months worth of savings set aside for emergencies, that can also help protect your retirement savings. Tapping into your retirement fund before you can actually retire can result in hefty penalties and taxes. Not to mention that withdrawing your savings makes it harder for your investments to grow. Even if you have a stable job and don't expect to need your emergency fund going into 2021, it's always a good idea to have some extra cash on hand just in case. This year has been challenging enough for everyone, and nobody knows what to expect in 2021. But with these time-tested investing moves, you'll be on track for a much brighter future. Now, knowing what we talked about, let me ask you this. Can the stock market crash of 1929 happen today? I don't know about you, but for me, much of our anxiety about the stock market crash comes from fear of what happened to maybe our grandparents or our parents. People wonder, for example, can the Great Depression happen to us today? I want you to really understand this. Another stock market crash will happen, but another Great Depression will likely never happen again. We know that the stock market cannot keep growing forever without interruptions. But when is the next stock market crash? Looking at historical data, we can see that a recession tends to happen every 7 to 10 years. If we assume that the 2008 recession ended in 2010, then it's been 10 years since that last recession. If we believe that the previous downturn ended in 2012, then we're about 8 years in with perhaps a few more years to go. This means either way that a recession is due. My question to you before you click out of the video, will 2021 be the year it finally happens? That's it for this video. Thank you so much for watching. Make sure you've already hit that like and subscribe button. And let me know in the comments down below, when do you think the next stock market crash will happen? And I'll catch you guys in the next one.